Discover your Manulife One number today at manulifeone.ca.
Join us Wednesday on Market Call when Greg Newman, Senior Wealth Advisor at the Newman Group, Scotia McLeod, will take questions on Canadian dividend stocks and protection strategies. Get a head start. Market Call at bnn.ca.
I love these guys. I love Bob and Jack over there. I even love their best friend, Steve-O, the Joker. So who's it gonna be this time? It doesn't matter. I'll get one of you. I always do.
Make death wait. Please donate to fund life-giving research, because heart disease and stroke take 1 in 3 before their time.
The lighter you are, the more agile you are.
Open road, open sky.
Top Picks is brought to you by Questrade, where you can trade stocks for $4.95.
David's first top pick is McDonald's. The stock's up just over 20% this year. You're not worried that it's had too much of a run?
No. So one of the core leadership themes in the market is companies with predictable cash flows, where you've got visibility out going forward, where you're getting a yield. Yield, I think, is really important in this market.
3%
and
here.
Has been over the course of the year, especially if it can be yield that grows over time. So over the last 3 years, McDonald's has returned about $75 billion to their shareholders by way of share buybacks and dividends. It pays a 3% yield. They have very strong global growth. Their same-store sales in Asia are running at like 13 to 15%. So you've got a very predictable business. They've increased the profitability by bringing things like McCafe, and they're bringing new people into the stores.
Stores are looking better, more contemporary?
They're looking better. If you walk into the one downtown Toronto here, the lineup's out the door to buy coffee first thing in the morning. But it's really interesting. We all like REITs. REITs have been doing very well. 2/3 of their revenue comes from rental revenue on the stores they have around the world. They own the real estate, right? So yes, it's great that they get the royalty revenue. That's about 4% of sales. That's about 1/3. But 2/3 of it comes really from running a giant REIT. Now, if you think they're going to be able to continue to grow globally, which they are, and we're doing a very nice job of, and if you think that they continue to be profitable, now they've been raising their prices and becoming more profitable, they should be able to continue to buy back stock and continue to raise their dividend. And these aren't terribly economically sensitive stores that they're operating. So we like this one. It's a global brand that we think has traction internationally and a very stable revenue base. And there's no wonder it's up 20%. We think it will continue to grow and continue to work its way higher.
AltaGas, mid-market player you like?
Yeah, really like energy infrastructure, as we talked about, because of all of the new finds all over North America that are creating more volumes that need to be transported. About 50% of their revenue comes from transmission of gas, and that is growing. About 33% is from their power segment, power transmission. They will probably double their EBITDA by 2017. So you pick up a 5% yield. Their EBITDA probably doubles over the next 5 years. And they just made this purchase of Pacific Northern Gas Pipeline, which gives them now a foothold into Kitimat to develop future liquefied natural gas business for export. So we like these companies that are benefiting from the increased volumes out there. They're long life assets. They pay good yields and will get yield plus some improvement by way of a rising dividend.
So you like yield, but cash is one of your top picks.
Yeah, and we continue to see issues in the broad equity market, and it's not lost on us about Europe and risks in China. The things I notice that I just highlight is that even on the rally days, the defensive stocks are the ones that are doing well. Second, volatility is very, very high, and I think that it's a good thing to have a little flexibility in the portfolio right now. I think that there's lots of risks that we're all dealing with.
David, let's gallop through your past picks, and this is from December of last year. We got to Peyto Exploration. Wow, what a star still, up 32%. Union Pacific Railroad, not doing too badly, up 8%. And Caterpillar, hanging in there, up 1%. Look at that. Would you still be a buyer of Peyto right now?
Still buy Peyto. It's a big holding. Union Pacific, we traded to Kansas City Southern. We really like the rails. And finally, on the Caterpillar, we're away from the equipment stocks today. We sold that in the spring. It's less economically sensitive stocks, attractive now.
David, thanks so much.
Thanks very much for having me, Andy.
David Burrows, we're out of time on Market Call. Thanks very much indeed for watching. We'll be back at the same time tomorrow. Have a good day in the markets.